Hello everyone, I'm Rob B. With me of course is Rob D, and this is the Property Podcast. This week we're looking at, is property investment still a good idea?
Yes, hello, like the man said, this is the Property Podcast. This is episode 154. Thank you for joining us. We are talking about, is property investment still a good idea? And it's interesting now because we've been doing the Property Podcast for, it might actually be 3 years now. And over that time, we've sort of seen the tone change quite a lot. When we started, it's amazing really, it's only a few years ago, but everyone was pretty negative about property. Then suddenly everything changed and all the papers were full of all the kind of boom time stuff. And now in the kind of conversations that I've been having when I've been kind of out at meetups and so on, and the emails I've been getting, things seem to be changing a little bit. People are questioning whether property investment is still a good idea. So that is what we're going to be talking about today.
It is amazing that, you're right Rob, I hadn't thought about it that way, but 3 years, although it feels like a long time of podcasting, in property it's such a small time frame. And you're right, I completely forgot, but when we started we were trying to convince people 3 years ago that property is good, and then everyone went wild for it, and now everyone's like, is it? So bizarre. It's bizarre how things can change so quickly, and that's why we talk about the bigger cycles and everything else and the big picture, but I'm sure we'll get into that in a bit.
Yes, we will very soon. But first, let's talk about meetups. Meetups are next week. So next Thursday across the UK, we've got something in the region of 25 meetups happening. In fact, not just across the UK, but across the world. We've got meetups in Hong Kong and Dubai as well. They are completely free to attend. They're always a lot of fun. If you want to come along, all you have to do is register at thepropertyhub.net/meetups. So if you head over to that page, thepropertyhub.net/meetups, you can see a list of where they all are. Hopefully there'll be one near you and you can book yourself on. And if you haven't been to one of our meetups before, it's very much unlike any other property event you're likely to have been to. There's no sales pitch, there's no presentation. It's just a group of nice people chatting about property. So if that sounds good to you, you might want to come along. And every time at the meetup, every month we have a theme. And this month's theme is going to be this episode. So the idea of the theme is it just kind of gives you a way into conversation, it gives you something to talk about if you're not quite sure how to approach people. So the theme for next month's meetups are going to be, is property investment still a good idea? Because like I said, Rob, it's kind of the unofficial theme in lots of conversations that are going on at the moment. It
is. It's talking about things happening quickly and moving fast and changing. 6 months ago, the Property Hub meetups didn't exist. And now it's the largest network of free property meetups in the UK. So it's not just the property market that's moving fast. The meetups seem to be going wild as well. And thank you to everyone who's attended. And thank you to all the meetup leaders who are making that possible as well. It's going absolutely brilliantly. We're really enjoying visiting different locations each month. But you're right, Rob. This is a conversation that comes up all the time. 6 months ago, I probably didn't get it asked once. But now we're getting asked it all the time. But before we jump in, let's have a look at the news story of the week. Quite an interesting one from the Independent and independent digital version, because the print won't be around much longer. Different story, but that's not the news. The news is, Rob, that Savills have put together a heat map of areas with different loan to values. I love this data stuff. If you dig down, some of it can be really interesting. If you just glance at it, it's not going to do you any good. But I think if you take a lot of this data, which Savills seems to produce an awful lot of, it can be quite useful.
Yeah, I do love a good interactive map. It's worth heading over there and taking a look. The show notes for this week, by the way, are thepropertyhub.net/is property a good idea? All together in one word, obviously. If you head over there, you'll see a link to this story. And it is really interesting. So the idea, this is for not investors, but it's for owner-occupiers. And it shows where in the country loan to values are the highest. So why is this interesting? The angle for the story is when base rates go up and mortgage rates go up, these are the areas where people are going to be struggling the most to deal with those higher payments because their loan to values are higher. And that is probably true. But also, it tells you a bit of a story about what's happened with house prices over the last few years, because you'd get the impression, if you were listening to the press, that house prices across the UK are on fire and everything's just gone through the roof. But you can see very clearly from the loan to values that this appears not to be the case. For example, loan to values in the southeast are relatively low. That's because, well, I imagine one of the reasons is that people are buying probably with bigger deposits, buying with cash and so on because they can't make it work any other way. But also because prices in the southeast and in selected other parts of the country have bounced back really quickly. But in other areas, so there's this whole massive swathe across the north of the country down through the East Midlands where loan to values are still very high, and that's because property prices haven't really moved much. And the great thing about the map is it makes it really easy to visualize all this stuff. So it's kind of interesting, but then you could use it from a sort of a broad kind of investment planning point of view as well.
I'm going to give a recommendation. If you do like this type of thing and you participate in the Twitter, then make sure you follow Neil Hudson. His Twitter handle is @Resi, RESI_analyst. That's @Resi_analyst. I'll link to it in the show notes, which this week is thepropertyhub.net/is property a good idea. Go there and you can pick up his Twitter handle if you'd like to give him a follow and let him know where you came from. He's got a very serious profile picture, but don't let that put you off because his information is brilliant.
Okay, let's move on to our main topic this week. Is property investment still a good idea? I've had an incredible number of emails about this recently. People are getting very nervous about the changes that are coming, especially changes from government. We've had plenty of announcements, really, and there's another budget around the corner, so maybe there'll be something else, who knows. But it's something that's very much on people's minds. People are getting nervous. They're thinking, should I get started if they haven't already, or should I sell up while I still can? Is property investment still a good idea? Well, you probably won't be shocked if at the end of this episode we come to the conclusion that it is. But rather than talking it up for 20 minutes, let's take the opposite case. Let's look at the arguments for why it might not be a good idea anymore. Work through kind of some of the arguments that people have and some of the concerns that we've heard and see how valid each of them are. So, Rob, let's kick off then. Let's explore some of these concerns. And there's quite a number of them.
There are, unfortunately. But the first one is the new tax treatment will reduce profits. Now, we haven't got a final outcome against exactly what this will look like. We've got a broad idea, but it hasn't gone through yet. We will know very, very soon. However, the bottom line is it's worse than before. But how much difference will it make to you? A lot of people are just assuming it's awful, but check. Use a calculator. We'll link to one in the show notes. We mentioned before, it's propertyhub.net/is property a good idea. thepropertyhub.net/is property a good idea. We'll link to a calculator there where you can put different scenarios and then see your potential tax bill. But a lot of people are actually panicking without studying the detail. The other thing is, there are things you can do about it. You don't just have to accept it. Rob and I have done a video course and a few podcasts now on the tax changes and what it looks like what's coming in and how you can not avoid it, but do the best with it. Go different approaches and, maybe not get hit as hard as you expected. In fact, for some people, it may give you that nudge to move into a better tax system than you thought possible and better than what you're on currently. So for some people, it's given them that wake-up call to move into something that potentially could be better for them. The other thing is, the final point I'd say on this, is nobody's ever got wealthy through rent. If you're in it for property for the long term, yes, a healthy cash flow is always nice to have. Of course it is. But the real money in property is made with the growth. So many people, particularly in property investment, peddle the, rent. And that's fine. And if you're in it for the short term, maybe that is important to you. But I know the majority of our listeners take a long-term approach. And if you are in it for the long term, then yes, a slightly reduced cash flow at the end of each month isn't something that we desire. However, it's not the end of the world because the bigger picture, the real money is made in the capital growth of the long term of property. So yes, the new tax changes will have a negative impact for a lot of people. First, see how bad it is for yourself. And then second, don't just sit there and accept it. Maybe have a look at doing something about it.
Yeah, this is a bit of a bugbear of mine. I've had conversations where people will just say, but I've heard that this tax thing's happening. Like, how will it affect me? It's like, well, I don't know. But there are very easy tools to work out how it is going to affect you. And so it's like people are operating from a position of panic without looking at what it means. So get the facts first, and then you can operate from reality and decide what to do about it. Maybe it is game over for you, but But there's no point assuming the worst when in about 5 minutes you can find out what the facts actually are.
Next time someone asks you that at a face-to-face encounter, hold your hand really close to their face and say, "I sense good times ahead." See how they react.
That would be a great way of getting some alone time, I think. All right. The second reason that property investment might not be a good idea is the other big change that we've had recently. Higher stamp duty rates for investors will reduce yields and push prices down. Yes, in London, that might well happen. But again, when you actually get beyond it, the kind of, the government are trying to deter investors, blah, blah, blah kind of stuff. Well, what difference does it really make? Outside London, not so much. If you're buying a property for around £100,000, which is a fairly typical amount that lots of investors spend, then the extra tax bill is going to be £3,000. That's not going to make a lot of difference, really, over the lifetime of an investment. In many parts of the country, property prices are going up by more than 3% a year. So if you're going to be holding it for, say, 10 years, it's really not going to make a big difference. Yes, it pushes your yield down because you're having to put more money in, but it's not a game changer. And this is the thing. In London, yes, it is. In some parts of the country, it will be. If you're flipping, it's annoying as well. But if you're looking at long-term buy and hold in reasonably valued areas, then it's something that you'd rather not have, but it's not going to transform property from a good idea to a bad idea.
I agree. It's London that's really hit hard here. And many people have speculated, and I don't find this a stretch to believe, that this tax in particular is aiming at the London market to really dampen things down there. But what I've already started to see at RMP Property is the amounts of people who've been invested in London who haven't had a slight interest in northern property are now investigating it or even investing. Now, don't get me wrong, they're not going to any old town they've never heard of. They do want the prime stuff like prime Manchester and Leeds and Liverpool and Sheffield, and that's fine because you've got to be in your comfort zone. If you're moving from London for the first time out, you might want something you're familiar with. But already I can see that effect happening, and there's always a lag with property prices and transactions and what's going to happen. But it'll be really interesting at the end of this year to see what's happened, because I think there'll just be that natural flow of money up north, something we predicted a few weeks ago, but it seems to be gathering pace, at least from my observations anyway. The next one that we hear sometimes are prices are unaffordable. It's just not going to work. You can't make buy-to-let work. Property is already at a ridiculous rate, and it didn't work before barely, and now it certainly doesn't at all. I tend to get that from people who haven't invested, who've only looked at London or the southeast, and that's understandable because they're right. London barely made sense before all these changes because the property prices were so high, and now it doesn't. I don't know how anybody could make a buy-to-let work in London after these changes. So they are right to a degree. However, there are areas in the country, and quite a few, there's not just like one town, there are plenty of areas in the country that not only are affordable, but are actually still at a price point lower than their 2007 peak. That's 9 years ago, people. That's a long time. That's quite a long time for recovery. Now, you could say, well, why would I want to invest somewhere with no capital growth? Or you could say, it hasn't gone yet. Is that an opportunity? It's for you to decide and do your research and have a look into it. I wouldn't be invested in a no man's town. But if an area's got the fundamentals and the values are attractive and the yields are attractive, then there may be a sign of an opportunity. But there are plenty of places, loads of them, that are still below the 2007 peak. And a lot of the rest of the country outside the southeast is barely above the 2007 peak. So there's loads of opportunity there. People are influenced, and I understand why, because of the media, that the property market in the UK is the London property market. It's not. It's two different things. The London property market is crazy. It is bonkers. We do think it's a boom. Rob and I haven't invested in there for years, and I think rightly so. However, there is a whole other market called the rest of the UK where there's lots happening. There's plenty of value and plenty of deals to be had.
Yeah, exactly. And this is another bugbear of mine. I've got a few of them today. I think the media doesn't help it lumping the whole country in together. Because London in the southeast, to be fair, is a massive driver, and it does make up a big proportion. Therefore, when you look at average UK prices, it looks like it tracks London and the South East, more than it tracks some of these other areas. But then when you dive into the regional breakdown, it's quite easy to find. Go and sort of look at what have happened in prices in different regions. And you'll see that, like Rob says, there are places where it's not got back up to pre-crash levels yet. Outside the southeast, it's totally normal for regular people in their early 20s to buy a house at about 4 times their earnings. People still do it. It's not the case that everyone is being priced out. It is just the southeast and selected other regions. And Rob made the point earlier that the real wealth in property doesn't come from rents, it comes from capital growth. That is the case, I agree, but you can't forget about income completely. If you've got prices that are rising by 10% plus per year, that might feel really great. You want to invest in something that's going to go up by 10% a year. But let's be real, that's not sustainable. If that happens, if prices go up that fast, they will have to come back down again. And you won't be able to make a decent return on future investments. So rising prices are great if you've already got your portfolio. But if you haven't yet, then prices just going up super rapidly means that you're not going to be able to refinance to get to that equity because the stress test won't work. And you're not going to be able to make a decent yield in the future either. So you've got to get this balance. And when people are talking about how we're not going to have the growth that we've had in the past, it's like, well, maybe we are, maybe we're not, but that's not the only game in town. Okay, so another reason why property investment might not be a good idea, the government. The government is going to make life impossible for investors, goes the argument. I can see why people are concerned about this. I'd argue that that's kind of the entire point. The whole point of what the government is doing is trying to calm things down by deterring investors and getting the balance back to where it was before in terms of owner-occupier levels. They've done a lot that is going to hurt investors. As already discussed. Will it get worse before it gets better? It might do. There are lots more things that could still come our way. So let's look at what could happen. Loan to values could be reduced. They could toughen up affordability tests, force lenders to make it more difficult for lenders to lend at high levels. I think that could happen. There could be more punitive tax measures. They might find new things to tax. They might remove finance relief altogether. Who knows? 3-year tenancies. That could happen. Mandatory landlord licensing. Wouldn't surprise me if that happened as part of the next election campaign. It's happened in Wales. Maybe that's a test, and it's always quite popular to look like you're cracking down on landlords. And maybe other things as well. All these things could happen. But equally, they might not. And you never really get anywhere if you don't do anything because of what might happen in the future. And realistically, it's not fashionable for politicians to say it in public. They can't really say it because bashing landlords is always popular. But realistically, investors are needed to some extent. Because of the way housing is structured in this country, you need a level of investment. Maybe the pendulum has swung too far towards investors, and in the short term, they're going to make it swing back the other way again and perhaps overshoot where it should be. But if the measures start having unintended consequences and it makes rents go nuts, or it means too many people exit the market and people can't be housed, then policies will be tweaked again to get to back to the optimum level. So I think it's fair to be concerned about what the government is going to do because it is something completely beyond your control. But you can say the same thing at any point. And if you let uncertainty stop you from doing anything, then you're never really going to get anywhere.
So, Rob, should we all give up, Ed? Are you out?
No, I am not. I imagine you're probably not either, unless we managed to talk you around in the last 15 minutes. But there are some very good reasons why property is still a good idea that we really need to address as well.
There are. There are plenty, actually. So while there are reasons not to invest, there are reasons to invest. And the simple one for me is capital growth, but described another way is supply and demand. We have an increasing population. Now, that's a combination of factors of why it's increasing. We've got immigration, we've got people living longer, and all these things contribute to a population that's rising. Roughly about 500,000 in the last 12 months. So 500,000 people coming into the country more than we had before. Now, the number of homes built is not matching that. And in fact, we've not been matching the amount of homes we've needed for a long, long time. The Barker report that came out over 10 years ago, which we've mentioned before, said that we needed to build 250,000 new homes each year to keep up with demand. We've not done that once in the last 10 years. We're not even close. I think the last 12 months to date, we're not even half of that number. So you get an idea, and that deficit has been happening for 10 years. So arguably that number could be revised upwards now. That supply and demand pressure, no matter what the government does, is going to continue. So if that continues, if you have a lack of something, which is property, and you have a lot of people, which is the demand, and people tend to like to live in shelter, then you will have an upward pressure over the long term. Of course you can have dips, of course. But the reason why you look at every long-term graph in property investment, the trend is upwards over the long term, is pretty much because of supply and demand. Yes, inflation has an impact as well, but the main reason is supply and demand. And that's not going to change. It's not going to change anytime soon. So for me, that point alone is enough to keep me investing. However, that's not all. We've predicted a few weeks ago at the beginning of the year that a rental boom could be on its way. Because if people do get scared by this, and it seems that some are, then they may not invest as they intended to before. People, newbies especially, might get nervous by this and decide not to invest. If less people invest, then there's less competition for landlords, but also there's less rental stock on the market. So a potential rental boom could be on the cards as well, which could more than make up for the tax implications that are heading our way. So if a rental boom happens, which wouldn't surprise me if it did in the medium term, then the tax changes actually become irrelevant because we wouldn't make it up through the rental boom that way. That's the more speculative, but based on simple fundamentals, I can see it happening. But Rob, there's plenty more.
Yeah, there are plenty more. And linked to the points that you've made is like the UK's status as like a centre of world investment. The fact that the whole of the world wants to invest in the UK because of supply and demand reasons, because of our legal system and place in the world, and many other reasons. So it's not just domestic supply and demand, but it's the issue of global demand. And the fact that even if credit is choked off, there are still plenty of international buyers who don't rely on that. So I think that owning a good quality asset in a place where the whole world wants to own property is probably not a bad idea. Whether it's fair or not is entirely another matter. Like the fact that property prices just keep on going up and rents are taking up an ever increasing portion of people's income and people are struggling to get mortgages as owner occupiers. Is it fair? Could the economic system be set up differently? Who knows? But that's kind of beside the point. It's really a moral decision about whether you want to sort of take reality as it is and position yourself to benefit from that, or if you're more comfortable not doing that. It's entirely up to you, but the facts are the facts. And it's really quite simple from my point of view. Whatever happens in the short term, if you look at historical returns, property has beaten the pants off all other investments if you use sensible levels of leverage. Leverage, as we've said before, is one of the great things about property investment. Yes, it introduces risk. Yes, you can go far too far with it. Yes, it's becoming less attractive as a result of the tax changes. But if you use a sensible level of leverage, you can get really great returns. And ultimately, it comes down to something quite simple. Is property investment still a good idea? Well, over the long term, over the rest of your investing lifespan, do you think that owning property is pretty likely to be better than not owning property? I would come down on that side of things. It's very easy to get into the details and get scared off by things. But I think if you've got realistic expectations and a long-term view, it's hard to be that negative.
It is. And like Rob said about investments, if you look at how your property portfolio's fared over the last 12 months, you've made a rental income, hopefully, if you've invested correctly. If you haven't, what are you doing? In this market, it's easy. And also, chances are your property's gone up in value as well. If you've got a pension pot, how's that done in the last 12 months? You've probably lost money and then paid for it as well. So, there's got to be a bit of perspective here. You've got to look at it and compare it to other asset classes and also look what the future holds as well. Now, as I said near the beginning of this, if you are in this for the short-term property investment, then maybe it's not as attractive as it once was for you. It certainly is harder. Can you make money out of it? Yeah, you probably can, but it is harder. But if you're in it for the long term, these changes don't worry me much at all. In fact, you shouldn't be bothered. The media will make you scared. That's their job, to create hype. Because if they just go, tax changes might have moderate effect, it's not really going to sell papers. So don't be led by the media. The media should not be your investment guide. The media lets you know what's happened, but it's not going to tell you what's going to happen. That's not their job. So just be wary of it. Be wary by what you're led by. Now, if you listen to Property Podcasts, the chances are you're not green when it comes to property. And even if you are, you're taking steps to learn. Don't be put off. Don't be scared. Educate yourself. Empower yourself with knowledge. And then make educated decisions that are right for you. If you do that, then you'll be fine. And that really comes down to the people that are scared by this. Rob, would you say the majority of people who are contacting you, I know this is the case for me, are newbies who are scared by the changes?
Yeah, I would. I think when you look at it, it is mostly people who haven't started yet who are having second thoughts. Those who are already investing, they're not thrilled about what's happening, but they've already seen the benefits, right? They've experienced seeing the value of their property go up. They've experienced the rent dropping into their bank account every month when they haven't really done anything for it. They've seen the benefits, so they're not discouraged. When we're recording this, we've got 2 summits coming up over the weekend. And before a summit, everyone fills in a pretty detailed questionnaire for us. They talk about their situation, what their plans are. They ask all the questions they want to ask. Not one of them has asked the question, is property investment still a good idea? Everyone, I think, is concerned about how they can adapt their strategy to take advantage of what's happening and what's likely to happen. That's an absolutely rational thing to do. But nobody is sort of thinking, oh, well, should I be doing this at all?
So that's it, really. Educate yourself. I've already said it, but it's so true. It's so powerful. That's what the people are doing at the summit this weekend. That's what you're doing by listening to the podcast. If you educate yourself, put yourself in a position of knowledge, then you can take action. Don't be put off by changes. Look at what's happened and then plan a new route, plan a new strategy. You don't have to accept all the changes that are happening. You can find a better way. And also, don't be scared. As we said, if you understand what's happening, and unfortunately a lot of people are failing to do that, but if you understand what's happening, then it's less intimidating. So surprisingly, Rob, we're going to advocate educating yourself when it comes to property investment.
Yeah, so there's a big shock. We think it is still a good idea, and we think that education is a part of that. I think that's an important point, and something that I made pains to stress in my book is that I think intelligent and educated property investment is going to be a good idea. It's not necessarily going to be the case that you can just buy something that's clearly already fully valued and expect the price to go up. That's never a sustainable thing to do. If you buy well and you do your research, the combination of income and some moderate growth will always be there over the long term. But it doesn't mean that you can just go out and buy any old stuff. You can't start any other business without really knowing what you're doing and expect it to work out brilliantly. It's the same with property. So it's all about educating yourself first and investing well. That is a good idea. So we mentioned plenty of resources in this episode. If you go to the show notes, you'll find links to all of them. They are at thepropertyhub.net/is-property-a-good-idea.
Right, coming up, we've got our resource of the week, and we'll let you know what's happening next week. But before we do, let's go to our review of the week. And thank you to Ivan Drago 333. Nice short one, this one, Rob. Always plenty of insight from Rob, and the books aren't bad either. The end. But
that was it.
Yeah, but it was 5 stars, so thank you, Ivan. We really do appreciate it. If you'd like to leave a review, I'd say it's simple. It's not that simple, but it's worth it because it makes us happy. Go to iTunes and the Property Podcast, and you can leave a review there, and we will read it out in due course. But as promised, we have our resource of the week now. And Rob, you were telling me before we went to record this that this particular resource has just been bought by Zoopla.
Yeah, thank you to Matt who put this one my way. Zoopla has been on a bit of a buying spree. They brought up several different sites and services to presumably integrate into their service at some point. This one is called Property Detective, propertydetective.com. We've talked about similar ones in the past. It's a property research tool. So you just pop in the postcode you're interested in and it'll tell you about schools. It's got lots of detail there with Ofsted reports and everything. Give you demographic information. There's also, however, a lot that you have to pay for, and some of that information that's locked, such as neighbourhood statistics and crime and so on, you can actually get elsewhere. So it's not just like a one-stop shop, but it is another tool to kind of have in your tool belt when you're researching an area. And presumably we're going to see some of this data integrated into Zoopla at some point.
So thank you to Matt for that. If you've got a resource that you'd like to send our way, please do get in touch and you might hear it on the podcast. Right, next week, Rob, we should be good at this one because of yellow lettings. Hopefully, I'll be worrying if we're not. Next week, how to let and manage a property yourself. So is this because we're giving up on yellow or are we just being generous?
The latter. This has been a very big picture episode, but the details have got to be done. You're only going to get these returns that we've talked about if you're letting out a good property to good tenants and managing it effectively. You can either get an agent to do it or you can do it yourself. And we've been asked to do some more kind of tenancy related stuff. So that's what we're going to do next week. If you don't want to use an agent, we're going to talk about exactly how to let and manage the property on your own, save that fee and provide a good service. Before we leave you, just a quick reminder that meetups are happening next week across the UK and a few scattered across the world as well. That's Thursday, the 3rd of March. Get over to thepropertyhub.net/meetups, see what's happening near you and book your completely free place. We'd love to see you there.
Okay, so that's it. Is property still a good idea? Surprise, surprise. Yes, it was. Next week, we'll show you how to let and manage your property. Before then, we'll be back on Tuesday with Ask Rob and Rob. But we've got a few days off now. Well, we haven't. We're going to do 2 summits, but let's just pretend we have, and we'll be back on Tuesday. Bye-bye.
Bye-bye. Thanks for listening to The Property Podcast. For show notes, all our past episodes, and to leave a review, go to thepropertyhub.net/podcast.